You probably have experienced liquidation or heard about others getting liquidated when trading perpetual contracts. In this video though, you're gonna learn how to trade with leverage but without any type of liquidation risk. So you'd want to watch this video till the end, because obviously leverage allows you to maximize your gains to the upside and allows you to make a profit when everybody else is losing money by obviously shorting the market. Now what if we take out the only bottleneck, which is getting liquidated? I'll leave a link down below in the description for the platform, which is going to be Haven. So once you click the link in the description and use the code leverage, you get a percentage of your fees. Now after that, let's understand how this works exactly, because everybody knows how leverage works and why liquidations occur. This is on chain, so it's important to understand where you're putting your money into. So Haven calls their system threshold based constant leverage, bracketed leverage. And here's the most interesting part. With their system, you can actually achieve gains significantly higher than traditional leverage and also eliminate the risk of liquidation. Now, leverage usually involves collateral and debt, as you already know. And from these, there is an LTV that is calculated. When this LTV reaches a certain threshold, your position gets liquidated. So basically, what Haven does is not let your position go above a certain threshold. So if the price happens to go against you, let's say you were long on Bitcoin dipped below your entry level, reached your entry level back again. If you were using traditional leverage, that would make you break even, but not in this case as shown in this chart. Faint line here represents traditional leverage. This line represents the Haven strategy. So they call this volatility decay. So that is one of the risks that you need to be aware of, because they mention it themselves. In finance, there's no such thing as free lunch. So what they recommend you do, you concentrate your liquidity into fewer positions. So here's what it would look like. This yellow line all the way down represents spot, and this one represents traditional leverage, while this represents the Haven leverage. So this chart is the price action of Sol. Now I'm very skeptical how this chart would look like after this time period, because we've had a huge drawdown after this. But anyways, you would have lost that in traditional leverage as well. Okay, I will show you what you are actually here for, but understanding fees is another important aspect of it. Haven actually charges a small amount of fees when a boost or a repay rebalance system is calculated. So 0.5 percentage of boost fee on the boosted amount. So it does not apply on your position but only on the boosted amount. Fee reduces as your position size gets bigger and bigger. This works on a position to position basis. They use this very simple formula for determining the fees, and there's also a repay fee, which is 0.25 percentage on the repaid amount. Now here's the platform. We obviously have the strategies section where you can go long and short on all these assets. And if you stick around till the end of the video, I have a bonus for you to make some extra cash. Anyways, you just click on that and it opens up a chart. And when you scroll down, that is where the magic happens. You can deposit anything here, and it's shown in the dollar amount. Now I haven't connected a wallet, but it's pretty simple. Then obviously you can increase or decrease your leverage, and it shows you the minimum and maximum LTV that we've talked about. Here's a cool little feature actually. So let's say you open a position at 116,394 and you're targeting the all-time high price, which is about 122, almost 123k, and then the duration for this target is 90 days. And once you set your time duration and the simulations to run, you should be able to actually simulate and see how your position would do with these settings, and then you can optimize your leverage according to that. Now if you're stuck around, here's the cool part. So as you can see, the 24-hour funding on each of these tokens, but here all of these are just LSTs. These just copy the price of Solana. Now if you have a brain cell or two, you'd understand where I'm getting at. So you can basically hedge against Sol to farm these funding fees, and the liquidity for this is quite good as well. All that aside, this is where I post everything, my thoughts and early alpha before I make any PDFs. Join the Telegram, first link in the description, subscribe.